What is up, guys? I'm back here again with another one. Today, I'll be discussing using lines of sensitivity along with momentum and market structure. All right, so in front of me, we have volatility 50 on the monthly time frame. As usual, I always say the higher time frame is king, and you want to really start your analysis here so that you can see how you can best take advantage of things. All right, so clearly speaking, we could say that the market is actually in a consolidative state on the monthly time frame. Reason being, this is a resistance area whereby price has been failing to break that resistance, and we also have a mini support area over here. If we don't want to view the market in that way, an alternative view is to assume that what we actually have is an uptrend, and I'll show you why we could come to that conclusion. So clearly over here, we have a high point, all right? And then we also have a low, okay? What follows after that low is this higher low. The reason why this is a higher low is that price did actually get all the way here, but it failed to close there. That's why it left that wick and it actually closed above. If you go to the line graph, you can clearly see, all right? So we have this high here. This is all one high. The market failed to break this high, okay? And then we had a low, and then we have a higher low. So this speaks volumes when it comes to market structure, as we have always known that an uptrend market structure, it consists of higher highs, right, and higher lows. So seeing as we have a low over here and a higher low, and we have a high over here, we can actually expect a higher high over there. So now with that being said, what that means is that when the market failed to break this low, we could have already assumed a buying bias while we're on the monthly time frame. And that buying bias would at least get to this region as we have just discussed, all right? So now the question becomes, how can we use lines of sensitivities so that we can get nice areas for us to catch the buy move? So to just repeat everything again, the monthly time frame, because we have failed to break this low, would mean that we are buy biased in this whole region when the market was coming up. The monthly time frame has just provided us a bias, and as we scale down to the lower time frames, we would essentially want to look for lines of sensitivities that are in line with market structure, buying market structure, so that we can have key points of interest for us to take our trades from. So now let's go to the weekly time frame and we assess how the market has been moving. So right here is that low. I would mark it from the monthly so that none of you get confused. All right, this right here is that low we have been discussing, okay? And this is the buy movement that we are saying we could have taken advantage of. All right, so while we scale down to the lower time frames, the weekly, i.e., we want to see how we could have found those key points of interest. Okay, so now using lines of sensitivity, it is apparent, it is very clear that while trying to ride this buy movement, we would also be looking for buying lines of sensitivity. We want areas that have shown buying interest in the past to show that in this market, there was buying participation at a specific price point or a specific area, and that would definitely validate our analysis. So now from the top of my head, when I look at this, I could definitely use this as a key line of sensitivity. Reason being, in the past, we had buying sensitivity over there. The market got there, failed to break, and it bought from there, all right? The second time that happened, it bought from there. The third time that happened, it bought from there. So when the market was actually moving up, i.e., especially when it had come and created that low we saw on that monthly time frame, and we see the market going up and it breaks above, we could have always assumed that a retracement into here could lend us a nice buying movement, only because of this buying sensitivity that occurred in the past. So now notice, this is just the weekly time frame. So of course, ideally, we wouldn't be using this. But if you do happen to come across a weekly line of sensitivity and price is near there, you need to take advantage of this, okay? So now let's scale down to the lower time frames and assess how you could have caught this move. So now, on the daily time frame, what you can clearly see is that we came in with a downtrending market structure. We have we have a high, all right? Lower highs, okay? Lower highs, lower highs. And then we get into that monthly low that failed to break, all right? And then we broke market structure. All these highs were taken out. So this break of market structure already shows us a change in market sentiment. And that means that the market, after creating this new high, would obviously come and look for a higher low. This would be a low, and this would be a higher low. So now the question becomes, why are we choosing to use this low over here? the reason is the line of sensitivity that we managed to catch on the higher time frames. Okay, so now at that line of sensitivity, the beautiful thing is that we also have a buying order block. So now it is actually in line with market structure and momentum as well. Right. We have a buying momentum from the monthly time frame. We have market structures that have been broken on the lower time frames. We have a line of sensitivity and we have a buying order block. Many reasons for you to take a trade. And from the top of the head, if I am to look for confluence factors so that I could say that this key point of interest could definitely hold, I could pull out a Fibonacci retracement. And remember, with this tool, we say that when price sits at the 50 or the 61.8 level, it's usually a level in which we can expect a continuation in price. So I pull it out from the low to the high that price created, and you can clearly see that price went and sat between the 50 and 61.8. And definitely this would be a great buy setup for you to take advantage of. Right. It's very important for you to understand that the market does not move in one line. Yes, we fail to break that low. That doesn't mean that the market will just shoot up like that. It moves in waves, i.e. we have an impulsive leg, then we always have a corrective leg, and then the buyers will show interest again. And this line of sensitivity is definitely showing us an area that has shown us buying sensitivity in the past. If we were to zoom out, you can see that. Okay, so now, if we are to go back to the monthly time frame, I just want to clear my chart completely so that we do not scribble. Just hold on a second. Okay, right. So now if we were to head back to the monthly time frame, we can still see that we can maintain our buy bias. Reason being, we said we want to form a higher high here. So what that means is that there's no harm in us going down to the lower time frames and still searching for lines of sensitivities that we can take advantage of, buying ones with in relation to where price currently is at the moment. Okay, so now if I am to pull out this line, green line once again, I would definitely call this a line of sensitivity. Reason being, you know, if we were to look at the past, we can clearly see that price dropped there and it went up like that. Now we have broken above, and truth be told, if we were to get a retracement into here, I do not see the market continue to the downside. And while we're on the weekly, we can clearly see that where that line of sensitivity is, we actually have this buying order block. So you see things start to line up, and we can really make our bias using this top-down analysis method, using lines of sensitivities, while also looking at that monthly momentum. You see, if the market really retraces into this line where we are assuming that we could get a buy movement from, it does make sense for the market to continue up. I do not see the market moving down. And that's only because of the monthly time frame buy bias that we have assessed. Once again, this is the importance of looking at the higher time frames for you to take long-term decisions when it comes to the market. So now, if we're to go to the daily time frame, we can clearly see now that we can now make use of zones, utilize zones to say, I would want to make this a definite key point of interest to buy. Okay, reason being, we have this buying momentum from the past, right? This is the daily time frame buying line of sensitivity. We get there, we bought vigorously like that. We got there, we bought. Okay, and now we have broken above, and to facilitate our higher time frame bias, we would want to retrace into there, and then we continue to the upside. I wonder if I can pull a Fib2, a Fibonacci, to see if this would be a 50 or a 61.8. Whatever the case, as you can see over here, a retracement into there would be definitely between the 50 and 61.8 retracement level, and we can continue up. Impulsive leg, corrective leg to the 61.8, we finish the move. So I could say that this is a key point of interest for me to take a nice and long-term trade on the Volatility 50 index. Okay, so now quickly, let's just look at another chart, preferably Volatility 100 right here, and we see how we can look at higher time frame momentum and also lines of sensitivity aligned with market structure so that we can take advantage of nice and big and juicy moves in the market. So from the monthly time frame, what we can deduce on Volatility 100 is that we have been tanking, all right, endlessly. But now what has happened is that from that movement, last month we finished up like that. In fact, this candle totally engulfed the previous month's candle. So what that means is that the buying momentum could want to come up. This could be the impulsive leg. And right now we could be then entering that corrective leg, and then we continue down. This is what we can only deduce from the monthly time frame. Another thing before we scale down is we can try to be naughty and still look for lines of sensitivities where we've had buying sensitivity in the past while we're still on this monthly time frame. So now, if I'm to put this green line over here, you can clearly see that this is definitely an area where there is both buying and selling interest in the past. In fact, what has happened is that we got there for this 1 month, we failed to break and we dropped. Over here, you can see all these rejections, we dropped, okay? Then we finally broke above, and then we retested and we shot up. So what that means is that at that line, we simply have nice buying interest from the past. So before we have even scaled down to the lower time frame, we can clearly already somewhat assume that this is a retracement. Price will probably leave a wick and then still continue to the upside. Okay, so I am semi-buy biased, but this buy bias has to be validated by my analysis on the lower time frames. Okay, so now if I am to go to the lower time frames, that is the weekly, I would want to see what is at that green line that I could take advantage of. Okay, so now once again, there's that past buying sensitivity that we have. Okay, and now what we have also from this perspective is we have the market having come in with a downtrend market structure. We had a high over here, we had a lower high, and one could also say this is a lower high that has been breached. All right, in fact, if we were to go to the daily time frame, while we're still maintaining, right, it's important, let's maintain that line of sensitivity so that we can assess where we can start making decisions. Okay, this is beautiful, right? So once again, now the daily time frame, things are actually becoming clearer. Why? You can clearly see that we came in forming lower highs and lower lows. These are the highs, right? Lower high over here. In fact, let me just mark the most recent lower high while we're at it, right? Simply put, this is the most recent lower high. We pushed away from there, but now look at what has happened. All right, from that area, we have breached market structure. All right, on the daily time frame. So now that line of sensitivity we picked up, what's also nice about that line of sensitivity that we picked up is the daily order block right there, sitting there. So this could definitely become my key point of interest to say, you know, in the long term, in the long run, I would want to take buy positions from this level. Okay, reason we have passed buying sensitivity there, we have seen the buying momentum starting to pick in, and we can see a buying order block right there. Many reasons to take a trade. If I'm to pull out the Fibonacci tool, and if we see that we're sitting at between 50 and 61.8, that also validates our trade. So obviously we pick it up from the low to the high, all right, that the market is currently printing right now. And you see that if, for instance, the market is to come into that key point of interest that we're speculating, we're definitely between 50 and 61.8. In fact, the 61.8 level is sitting exactly by that green line of sensitivity. So now what that means is that one might want to wait here and make use of this zone as a key point of interest, because in my opinion, this is likely to be okay, let me just remove this Fibonacci tool so that you can see exactly what I mean. This is likely to be the impulsive leg, corrective leg to the 61.8, and then we continue up. All right, for the purposes of this YouTube video, obviously I will not be going down to the lower time frames to discuss how we can even catch more intraday moves with this technique, but hopefully you can clearly see how these lines of sensitivity and everything that you have been taught on this channel can actually help you to make better informed decisions. I think the most important thing is to realize that the higher time frame is where the game is played, and you really want to be in line with what's going on the higher time frames. Okay, if you like what you see, feel free to contact me. Mentorship is definitely going ahead. It's definitely available. My contact details are in the description of this video. If you want to catch up with what we do during the week, you can refer to my Instagram channel, and you can obviously see how we catch these big moves, because I do not shy away from showing the results, even from current students and so forth. Until next time, ciao.